Thank you guys for tuning in this morning. Last night my internet went out, so we're going to get to it right now, and we're going to get right into it to not waste your time before the open, okay? This candle right here, we went all the way down, and this was our expected move that options have priced in for the week, and we went all the way down. We almost touched directly on it, and then we started to buy back up. So this kind of tells you that this area here, there are some buyers possibly down in this area. We did not fully break our bottom of our trend here, going up and going pretty far back. So what we want to see is in shorter time frames, are we going to see a pop? And I already saw the 30-minute had a divergence that already rolled over, and then we have this one here on the hourly. So the hourly has officially rolled over. This divergence is starting to prove itself. Now the big hurdle is we need these to get above the center line, and then we need, for a bigger pop, we need to get into positive territory. The Qs actually have a similar thing going on, and if you noticed, I did connect, in my last video, I did connect these lows. So if you're subscribed, you could use this as a little bit of an anchor point for some buyers, and we're outside of that Bollinger Band. It looks like this candle here, if we can cut above the top of that, of yesterday's candle, I think we're at least going to go to our 9-day or the 20-day moving average. And the 20-day moving average, if we can get there pretty quickly, it would actually fill this gap. Don't be closed off. This actually could be a pretty good short squeeze. We have a lot of stocks that have suffered for a long time, and we actually could see this come all the way up and touch into here before we get some kind of larger drop. You can see on the hourly where we're going to run into that resistance. It's pretty much along this little short-term trend. If we can break above that, we give ourselves a chance, and we can see maybe a little bit of a left shoulder here, okay? So if we're able to spring up into this area and get a dip back down, maybe even get that retest and then start to move higher, you'll see this structure start to form. Okay, left shoulder, head, right shoulder. You can play the break right here and have confidence that that's going to spring upward or at least go to this gap fill. Real quick, I do want to give a bearish case here, okay? We do have a lot of resistance in these areas, and even though we are touching into support, we are very bearish. So we could just see this start to pop up, and then once this low is cut, I believe that the gloves will be off. I think that we're definitely heading towards that 340, possibly in the next couple of days. Like we might see an actual dramatic sell-off considering we're not going to be oversold anymore. So we want to be very careful as a lot of stocks are starting to move towards their 200-day moving average. So I'm going to pull up Apple on the 2-hour because we actually said when this happens, it's going to be kind of scary. And if we look, we are just maybe like right on our purple zone. Okay, the first hurdle was we got out. Okay, now you know your direction. We're going to go to the bottom of this zone. And the next hurdle is, are we going to close outside of the zone? We tried to do it, and then we bought back up, and we're literally closing like right on the last line of it. So it is possible for us to get some room here, but we could come into this level of resistance. We could come into this level of resistance. We can come into this level of resistance and see sellers start to step back in. The only thing going for you on this 2-hour chart is a lot of the time this 2-hour here, when this rolls over, the daily likes to roll over as well if this confirms. So if this can confirm and get a strong move, maybe dip down one more time like we like to do in this zone, then maybe we can see it extend in some kind of ABC pattern to fill this gap at 182.92. The bearish case for Apple is we are closing pretty low and we're not outside of that Bollinger Band, okay? So what we could see is just another plunge downward today to our 200 right here at that 165.80-ish, and then we see that start to gain some ground around the 200. I think if we do dip down to the 200 on Apple, we will start to see some buyers step in. Now, Tesla was freaking me out today, okay? Tesla really was coming down, and I was like, man, is this thing going to crash to its lower of that, to the lower side of that triangle? And it really looked like it was going to, but we did get that small buyback up throughout the day. We are still closing below what I would consider its nice support, but we could see this thing start to roll over. I'm going to start to look at an hourly here, and you can see we actually do have a very tiny hourly divergence here, and it proves itself on the MACD. It's not really the most relevant, the most significant of divergences, so maybe it is enough to at least pop us up into here, which is where our gap resistance starts, and then we can see what happens from there, see if it does want to just come up and touch this, and then be ready in case this thing starts to fade. The bullish side, I would say for this, is it's going to start to consolidate a little next week. Maybe we get some good news and we touch the top of that triangle one more time. At the bearish side, I would not be surprised if today's GDP number comes out bad for the market and we do see an extension of this drop. Okay, it's been very bearish. So for that to not continue, you need some good news behind these divergences. And GDP is a good form of good news. So if we get some good news with GDP, that could extend us higher. But if we get bad news, I think we will end up coming to that bottom of the triangle maybe before the week is done. Amazon, we kind of have an indecision candle, but you can see what it's doing in the pre-market. We are hitting the low down here on the pre-market. So what this is saying is if we break above this high, maybe we go and fill that gap. That's kind of how I'm treating it. Maybe we go fill this. But if we do not break that high, instead if we break the low, then once we get past this little bundle here, there's really not much holding you up until that 118.50. And then after 118.50, we just want to be paying attention to that 200-day moving average. One thing about Amazon on the hourly, it actually has a pretty significant divergence. It's been moving pretty good, so this is pretty significant. And if you really look at the RSI, I'm going to try to blow it up a little. You can see that's a pretty significant change, okay? So if we are able to curl up and get a buy signal, I am expecting us at least to come fill this gap, and then we'll have to see if we start to create some kind of right shoulder along this neckline here. That gives us the left, the head, the right shoulder, and then we just measure from here to here, and you'll probably see this play out all the way up to that price target of about 137.57. Something that's surprising and a little hard to read right now is NVDA. I can't really tell what it wants to do. We do have an indecision bar, so I'm just going to go off of that today. Okay, let me shrink this down a little bit for you. All right, so we're going to go off of that for the most part today. We do have this slight indecision. Okay, so if we break above this high, we could see this come up into this little bit of resistance in here, which actually is the start of our gap resistance right in here. So what we could see is some kind of reaction from there, maybe a little pop higher, and then we start to test this level one more time. That would carve out a right shoulder in a overall left head right shoulder, so a head and shoulders forming here. If that does start to break at that point, you're looking for a break, retest, and then go to lower levels, and you can measure that right down the middle right here to find yourself a price target. I would be very careful looking for this bounce on NVIDIA though, because even though we did see some green, okay, we did get our green day, so the VIX gave us our green day, we are still seeing this really flag out, and we're not really moving anywhere. We're just trickling up, which means we could see another move like this happen right here to the downside. As far as it goes, it could happen today. Something a little crazy that we were talking about in the morning, you can see even today, this 10-year yield is starting to go nuts, which means it's going to hit my target on TLT of that $88.14. Pretty awesome. But we did break out of this channel here, which is very, very bearish. Okay, we are skyrocketing up into this unknown. We don't know how high it will go, and you need this to start to slightly fall off in order to see that bounce. So we're hoping for a good GDP number that convinces the market that rates will not have to go too much higher. And that will be good news for those tech stocks that we just looked at. Overall, with yields, I am paying attention to the 2-year and the 10-year. I think if the 10-year starts to just kind of come down a little slowly, and then you see this 2-year here actually come up into its resistance, and we actually see it forming a big divergence on the daily. If this starts to skyrocket to the downside, while the 10-year does not move down as quickly, we can see the yields start to uninvert, and that is going to be your big signal for recession. TLT right now, we are actually going past my level of 88.14 as of the pre-market here, okay? 88.14 was what I was targeting. We dinked our head right on it yesterday, and it looks like we're coming even lower. Maybe that means we are going to come into this little bit of support along here, and then we start to see that push to the upside. Okay, maybe we just touch down in here somewhere, and then we see it start to reverse. Overall, though, we want to be paying attention for when this daily starts to cross over, okay? Because we do have a good divergence here. We see it. It doesn't really prove itself on the RSI, so we want to pay attention to that. But if this does roll over, we will get some kind of pullback, or maybe even a divergence play all the way up into here, and then we can start to carve out a right shoulder. We start to get this, this, and this, and then we can use that to find some kind of trade right in here for TLT. Lastly, the VIX, we did get a funky bar yesterday. Okay, this is a topping bar. We are getting a big wick to the upside, and we need this in order to get our bullishness back in the market. We need this to drop below that 200 again and start to maybe go meet up with its 50 and get this retest. That would be the most likely scenario, in my opinion, if we do get that good news. As I go into a 2-hour, you can see that I was paying attention to all these divergences and they didn't necessarily play out fully to the downside. So we are holding up. Maybe that's because people are waiting for the GDP and we are still in a fairly fearful scenario right now. So it is remaining higher. We want to see how this reacts to that GDP number. And if we start to cut below this moving average here, we can start to target the next one. This moving average cuts that one. We can start to target that retest. First of all, sorry it's so dark. I am filming in the morning because my internet was out, but thank you guys so much for tuning in. The overall takeaway from this one is we are in a very bearish time right now, okay? And we need some kind of good news. So even though we do have signs that a bounce might be coming, even today, we need some good news behind it in order to get a legitimate bounce to get us out of oversold conditions and to go fill some gaps. I appreciate you making it to the end of the video. I hope you have all the luck in the world trading today, okay? Peace.